Welcome back to the Sell2Rent Podcast. I'm Danny, and today we're diving deep into a topic that's impacting millions across the United States: housing affordability. With home prices soaring and mortgage rates at their highest in decades, first-time buyers are struggling to afford homes, while investors are rethinking their strategies. But here's the big question: is this crisis also an opportunity? Joining me today are Merinda and Alex, and we're breaking down the real impact of this affordability crisis, what it means for investors, and how policy changes could reshape the housing landscape.
Let's set the stage. The U.S. is currently short by nearly 4 million homes, a gap that's taken years to form. Even though new home construction is picking up at this pace, it could take over 7 years to close the supply deficit. Home prices have continued to rise, driven by high demand, low inventory, and increasing construction costs. In many cities, intense competition and bidding wars are driving home prices significantly above asking prices, making home ownership even less attainable.
And this shortage has serious consequences, especially for first-time home buyers. A recent survey revealed that over half of non-homeowners believe they will never be able to afford a home, with this sentiment particularly strong among Millennials and Gen Z. Young professionals are finding it harder to save for a down payment, and with interest rates hovering around 7 or 8%, monthly mortgage payments are simply out of reach for many.
That's a significant hurdle for many aspiring homeowners. So Alex, how can investors adapt their strategies in this environment?
While these challenges are frustrating for first-time buyers, they present unique opportunities for investors. Here's why. The rise of long-term rentals. With more people renting instead of buying, investors can capitalize by expanding rental portfolios, especially in cities with high rental occupancy rates. This goes specifically for single-family homes. Buying distressed properties, homeowners struggling with rising mortgage rates may be forced to sell. Investors who buy at the right time can secure assets below market value and profit when conditions improve. This is a beneficial situation for sellers and buyers, prevents the seller from going to foreclosure or in higher debt, and provides the investors with unique opportunities. Fixed-rate financing, locking in a low fixed-rate mortgage now could provide stability and long-term gains, even as interest rates fluctuate. Diversification is key. Instead of focusing on one type of property in one market, investors should consider diversifying to spread their risk and maximize opportunities. Cities in the Sun Belt and Midwest continue to attract investors looking for higher yields and lower acquisition costs. Expanding into affordable secondary and tertiary markets where home prices are lower and rental demand is strong presents a promising opportunity. With advancements in AI-driven property management tools and top-tier property management companies, managing long-distance assets has never been easier. Sellers facing affordability challenges may offer seller financing or other creative financing solutions, such as subject to deals, lease options, and wraparound mortgages. These methods allow investors to acquire properties with lower upfront capital and more flexible financing terms.
Beyond individual strategies, what systemic solutions are being proposed to address the broader affordability crisis?
Several initiatives are underway, including zoning reform. Many cities are relaxing zoning laws to allow more duplexes, townhomes, and accessory dwelling units, ADUs, to increase housing supply. First-time buyer incentives, programs offering low-interest loans, tax credits, and down payment assistance could help first-time buyers compete with investors. Affordable housing near transit hubs, new policies, such as California's Abundant and Affordable Homes Near Transit Act, aim to build more housing in areas with existing infrastructure to lower costs and boost supply.
Expanding housing affordability doesn't just help homebuyers. It drives economic growth by increasing tax revenue for local governments, creating construction jobs, boosting consumer spending and job retention, reducing income inequality by giving more families access to stable housing.
So it's clear, this crisis isn't just a real estate issue. It's an economic issue that affects employment, wages, and the broader financial system.
Whether you're an investor or a first-time buyer, staying informed is key. Investors need to watch market trends, leverage technology, and stay ahead of policy changes to make smart moves.
And if you're looking to buy a home, don't give up. Keep an eye on incentive programs and consider alternative homeownership paths, like co-buying or lease-to-own options.
Great insight. Before we go, what do you think? Are you seeing opportunities in this market, or do you think affordability is only getting worse? Leave a comment and let us know. And of course, if you found this episode helpful, hit that subscribe button and stay tuned for more real estate insights.
If looking for great investment opportunities, book a call with Sell2Rent, your trusted investment advisor.
Bye.